How's it going? I'm Ryan. Today I'm going to go over the one trade that I took on NQ. I caught a long position off the bounce from the low of today. It was a nice win. Hit the take profit. The runner hit take profit. Really, no drawdown really on this trade. Overall, it was pretty smooth, pretty straightforward. I'll get into the trade that I took and why in just a second. But first, I want to take a look at some of the levels that I was watching coming into the day, and that will kind of describe why I took the trade that I did and my confidence behind it. So we're looking at NQ here. We're on the 4-hour time frame. I like to plot all my levels off the 4-hour time frame, putting an emphasis on opens and close. Wicks play a part, but we don't prioritize those. So the levels are pretty much the same. If you've watched either of my past two videos, we've been in this same kind of area the past couple days this week. But for sake of going over that, we will. So to the bottom, we have the level of 20,486 or so, we'll call it. The next up is 20,581. Then the next up is 20,666. Might have to move that 1 point just to, we don't want to know that mojo. We'll go to 20,790-ish is the next. And then that also kind of corresponds with yesterday's high a day was right around that level. Yesterday's low a day was right down here around 20,500 or so. So what do we have? We had some distribution, right? We had some accumulation, a big move up. We had some distribution, big move down. And so far we've kind of been in this range, in these levels. Starting the day, so yesterday we had a low down here and we had a big move up. That move kind of stopped right at this level that was coincided from this last swing high here that we saw a pretty big sell-off. And in the pre-market, we broke above that temporarily, sold off. As the market opened this morning, we had a big sell-off that dropped us hundreds of points. So let's take a look at a lower time frame and kind of see what that looks like. So we'll switch over to the 15-minute here. Here we see that big run up yesterday, right? After hours in pre-market, we kind of hold around this yesterday's high and this level that we have around 20,790. Like I said, market opens, you see the market opens here at 7:30 a.m. my time, and we get this massive sell-off, pretty much disregarding these levels that we'd expect to act as support, just selling right through them. Lots of weakness, high volume on these selling candles, big bearish candles, so indicating lots of selling. What was I watching for? Well, any day coming into a trading day, I plot levels that are on the 4-hour chart. I look at what levels we are close to. I look at the overall trend. Are we trending up? Are we trending down? Are we kind of chopping sideways? If so, then I look at what levels are around, and I give the market some time to play out. So I don't really take a trade right out of the gate. Usually I'll give it, a few minutes to show if the market is weak, if the market is strong, if the market is choppy, then I'll avoid a trade. Really just kind of letting price move in the direction that it wants to. And then I base my thesis or like my trade ideas off of that. So I don't have a bias coming into the day. I let price kind of dictate where it wants to go. And then I just try to hop in if we're trending up or down. I try to hop in and catch that trend. Or if, today I guess the trade was counter to the trend. So looking for a potential bounce or a reversal. I either trade reversals or I trade continuations of trends. That's pretty much what I'm looking for. It all comes down to what is price doing, what is volume validating. It's a lot of nonsense that I just spewed, but let's take a look. So I'll pull up the 5-minute because I really like to use the 5-minute for the basis for my trades, right? I use higher time frames to judge what levels we might be looking at. And I do like to use higher time frames as well for extra validation. So I'll hold this 15-minute up. I use 4-hour and 1-hour for levels, but I don't necessarily use them for trades because I'm usually more of a scalper. I'm in and out of a trade in, 10 minutes or so. 10, 15, 20 minutes. So I don't need to be trading off a 4-hour or 1-hour. Mostly I'm trading off of the 5-minute. I'm getting entries and exits off the 2-minute, and I'm using the 15-minute to confirm strength or weakness. So let's take a look. We sell off. We're approaching this first level at 20,668 or so. I'm watching for a potential bounce. Does it look like we're going to hold this support? Do we come down? Do we consolidate around this level? Do we get some wicks below but closes above, showing that buyers are holding up in this area? And we can see quite easily that that is not the case, right? We have really high volume and we blow right through that level. We do get a little bit of consolidation here, but that consolidation is already below the level that I'm watching. And as we continue to sell off with increasing volume, we never make any sort of move up, right? We get this doji, but that's not really a bullish candle, especially after this big move. You know, that doesn't really give us any indication that we're going to bounce, even though it is a green candle technically. It's a doji, which doesn't really indicate any direction at all. From there, we're retesting this level that we broke, right? I would expect this to act as support. It doesn't. We blow right through it. Then we test it. It's now acting as resistance. This could have been an entry to the downside. You could have taken a short entry on these wicks testing this level and failing to close any stronger. But I did not. I was waiting patiently. I didn't quite see what I wanted. I was looking ideally for a little bit of a lower high and then take that trade. But momentum was pretty strong and we didn't quite get that. So we sell off and we start approaching this next level. What do we have? 20,580. We sell right through it. In fact, this 5-minute candle doesn't even stop for a second. You know, it just blows right through it on the highest volume that we've had so far. So that is out of the question, right? And even though we're dropping hundreds of points here, I'm not entering a trade because I'm not getting the setup that I want. And usually the setup that I want to see some sort of like consolidation, some slowdown in price action that gives me a good risk to reward. And you'll see that in the trade that I took. It'll make a bit more sense. So blow through this level. What are the next levels I'm looking at? Well, I'm looking at yesterday's low of day. You can always take the previous trading day's low of day and high of day and expect them to act as some sort of resistance or support depending on where price is relative to those levels, because they are psychological levels. And if it's a low a day, then you know that buyers were present in that area to keep price from ever falling below it. And likewise, if it was the high a day, then you know that there were sellers in that area preventing price from going any higher. So as we're approaching that yesterday's low a day, I know that there's buyers down there. We also have that coincide with a level off of the 4-hour time frame as well. So kind of a double stack of support down here. And you see, as price comes down, we have this massive bearish candle, and then we see these candles print smaller bodies, which is less bearish, right? And we see volume dropping. So we see that selling volume, we know that selling is declining as we approach this area, and we know that because the candle bodies are smaller, so that shows less momentum, and then volume is dropping. So there's less people transacting, there's less people selling. You can tell that by the volume. And then you can also see that visual representation by these candles being smaller as well. So seeing this, we already know that maybe there's a potential for a bounce, or at least just a temporary bounce from here. This next candle really sold me, and this is a extremely bullish green hammer candle on very high volume, right? So we see the selling kind of declining in both the candles and the volume. And then as we come down and test both yesterday's low and this level off the 4-hour, we test that, sellers can't keep us below it, and buyers push us all the way back up to close even higher on high volume as well. That to me is a good indicator up until this point that we might catch a bounce here. I waited for this next 5-minute candle, low volume, it's kind of a doji, not a lot to gain off of that. But what this does set us up for very nicely is this is a pivot low. And a pivot low is a 3-candle series where we have 3 candles. The candle in the middle has a lower high and a lower low than the 2 candles to either side of it. So you see these 2 candles have higher highs and higher lows. This candle has a lower low, lower high, and this is a classic sign of a reversal. And I'll show you that you can get that in the opposite. So see right here, we have the exact opposite. It has a higher high, higher low than the two candles beside it, right? These have lower lows, lower highs, and then we get that pullback. I'll show you another example also from today of a similar thing. So this is just a classic 3-bar situation that you can see if it occurs at a specific level of interest, such as like yesterday's high, yesterday's low, or a big area of confluence like a 4-hour level. You can take that as maybe an indication that price might at least temporarily reverse from that position. So I got volume and price confirming that we're looking like we're going to get a bounce in an area that we expect to get a bounce, right? We have support. We have 2 levels of support right here. We have volume and price action kind of confirming that. And then I wait patiently. We get this confirmation that this is a pivot low. Also, what do we have on the 15-minute? If we take a look at the 15-minute, we're super bearish. These 15-minute candles, nothing bullish about them. Until what do we see here? Off of this price action, that we have these 3 5-minute candles, right? That would be 15 minutes. 3 times 5 is 15. We get a hammer on this, holding those levels as well. We get that hammer, the first indication of a potential bounce on the 15-minute as well. So everything here is lining up, right? We got the higher time frame levels, we got volume, we got price action, we have multiple confirmations on 2 different time frames. We have a classic pivot low, or pivot low price action formation, like a pattern forming. So everything here. So I entered a long position on this subsequent candle right here. We get a nice move up, no real drawdown at all. Nice move up. I had a 30-point take profit. Whenever I take a trade, I take my first trim at 30 points, and then I'll leave 1 runner, and that runner depends on price action levels, etc., in terms of where I might try to look to take profit on that. In which case, I set my take profit for my runner right at this next level up, because if we're bouncing from this level, I'd expect us to come back up and retest this level. So it worked out perfect, right? I took 6 contracts, 5 were trimmed at 30 points. My remaining runner was trimmed right here. Once I hit my first take profit, my stop loss for my runner is set at break even so that I cannot take any loss, and it's a guaranteed win on the day. And this worked out really well. Where did I place my stop loss on this trade? So I had a little bit wider stop loss than I would have liked. It's the only thing a little bit difficult about this. We had such a volatile day where these candles are printing like 40 points in a single candle, which made me have to have a little bit of a wider stop loss. So when I entered here, I based my stop loss generally on what would invalidate my trade idea, right? So what would make a bounce from this area invalid? Well, if we came down and just broke right through these supports, right? If we printed these 3 candles and then the following candle, instead of this nice bullish green candle, if instead we printed something like this that just crashed right through this support, well, that would indicate that buyers aren't going to push that price up. So I placed my stop pretty much right here, right below this level here, knowing that if we pushed back down through both of these, we were unlikely to get a good bounce. So luckily we didn't do that, and we got a nice move out of this area, and it was a win. But that was about a 1-to-1 trade with my first trim, because I had to kind of move my stop loss a little lower than I would have liked, because I wanted to place it in an area that would invalidate my trade rather than just like an arbitrary risk to reward ratio. Ideally, my risk to reward is a 2-to-1. That's generally what I shoot for. But in some scenarios, I will expand that a little bit and decrease that risk to reward ratio because I want my stop loss to make sense in terms of invalidating the trade rather than just a arbitrary ratio of where I take my profit. Now you could look at this and say, well, I could have moved my take profit up to this next level, and that was about 60 points for my entry, in which case 30-point stop loss and a 60-point take profit would have been a 2-to-1, and that ratio would have been preserved. That's valid, and it would have worked out in this scenario. But I find that taking a 30-point move from my first trim, on NQ especially, a 30-point move is not uncommon at all, especially in a day like today where we have this volatility. So I feel very comfortable taking 30 points. Additionally, 30 points with 5 contracts is it's $300 flat. So without my runner hitting a take profit, if my runner gets stopped out of break even, it's still a $300 win. I like to shoot for that. You know, if I can have 300-day averages, that's excellent on a 50K account. So that's why I took the trade, right? We went over the levels. What was I watching? You know, if we look at this level on the 4-hour, we can see that we had some resistance here. It's been resistance when prices below it. It's been support as prices above it. We also have some bounces in recent days around here. You see, you know, this swing low here, this swing low here, kind of swept it on that move. But it's pretty valid. And it happened to play out really well in conjunction with yesterday's low. So I hope that makes sense in terms of looking at price action slowing down, this, you know, this massive sell-off slowing down, volume slowing down. We get that first bullish print where we would expect it to, accompanied by sufficient volume to indicate that there are a lot of buyers here. And, you know, it's just been selling off so strong that eventually it's going to bounce. You don't want to trade counter to the trend generally, but I didn't really get a good entry along the trend. It gave me a good entry counter to the trend. I'm not opposed to that, especially when I'm just looking for that 30 points. That's all for that trade. I said that I'd give another visual kind of explanation. I'd show another example of this 3 candle play. I really like it on the 5-minute for scalping. So let's take a look. I showed you this one, right, where we have the higher high, higher low, and then we get the pullback here. You can see that you could enter after that prints. You could enter on this candle, and it moves about like 50 points or so. It's a nice trade. From there, it bounces, and this is another example of that pivot high candle pattern, right? So same thing as this right here. What do you have? You have a higher high, higher low than the surrounding candles, the 2 candles to either side of it. They have lower low, lower high, and then you get a pullback from that point. And where does it stop? At this higher time frame level where you kind of expect it to find support. So really, price has been playing out really nicely this week for me. I feel like my levels are accurate. We're getting price action bouncing and rejecting off of my levels. And then just pairing that with volume and price action at those levels is really the way to go. So that's another example of a pivot high. Here's a pivot high. Here's a pivot low. It's the exact opposite, right? Lower low, lower high. A pivot high would be higher high, higher low. And this is just a classic reversal pattern. In addition to when you have things like this, right? Like a shooting star, that long upper wick, weak close, long upper wick, weak close, you get that pivot high candle pattern. These are all things that should increase your confidence in taking these trades. So let's take a look. We'll just do a really quick example and we can see. So here we can see another pivot low, right? What do we have? We have a lower low, lower high, then the 2 candles to either side of it. And while we don't get a strong move right off the bat, we do get a little bit of a pullback. But what I usually like to do is place my stop loss below or above the pivot level. And if you did so, if you entered along here, and it is a bit of a stretch, well, let's say you entered at this candle, that's 577. You place your stop loss below this, that's 555. That's a 20-point stop loss. That's not bad at all. We did get a little bit of a pullback, right? And this might have you sweating, but we never hit that swing low. We never broke that swing low, and then look at what happens. Really strong, oh, excuse me. So we're looking at this pivot low pattern here. Place your stop loss below it. You have some chop. You have, 20, 30 minutes of sweating perhaps. But if you stay true to your plan, look what happens. You get a big move out of that. And it wouldn't have stopped you out and it would have hit your take profit, even if your take profit was damn near 100 points or even more because we got a massive move out of that. So it's not 100%. Trading is never 100%. But if you have some of these things in your bag and your toolkit, it can increase your profitability chances and increase your win percentage and just give you more confidence in the trades that you're taking, especially when they line up with higher time frame levels. thank you so much for paying attention. This has been, quite a long video, but I wanted to go through and really explain what I was watching, why I took what I did, what worked, and give some other examples that you can look at these charts and kind of see that they work out more often than not. I trade every morning, Monday through Friday. Stop by if you want to see me trade live. I'm trading a demo account right now as I'm kind of implementing and practicing my strategies, looking to get a challenge account so that I can become funded and make this my full-time job. If you like what you see, please leave a like, leave a comment, subscribe. It really helps me out. That's all I got for you. I hope you have a great rest of your day. Thank you for watching. Peace.